25 bips is a lot of people were expecting, but I would have to imagine that there can't be much more in terms of upside for rates, considering the predicament that the Australian economy is in right now.
Yeah, that's right. ANZ Research predicts that this is the last rate hike that we see in this cycle, but that higher for longer rate story continues. We're not expecting any rate cuts in Australia until the very end of 2024. Now, unlike other countries that have much higher shares of fixed rates, particularly in housing debt, Australia is a very skewed to variable mortgage rate. So people do get hit really quickly on the consumer end by these rate rises. In fact, around 75% of housing debt, which is by far the biggest debt in the consumer sector in Australia, is variable. So within weeks, these numbers do flow through to real mortgages and real people. That is something that limits our ability to see the Reserve Bank of Australia get as aggressive as, say, the Fed or the ECB.
Can I just ask you as well, because, inflation has remained relatively sticky. You read through some of, it's the same old clarion call coming through from the RBA as to be expected about the requisite impact that higher inflation is having on a lot of people in Australia. But do you think that this potentially now will definitively alter the fiscal policy? Because the Treasurer was suggesting that, some of that infrastructure spend that was supposed to be in the order of hundreds of billions of dollars, we might see some cutbacks when it does come to that, and I suppose the Keynesian impact of it all in terms of a multiplier effect and any kind of net negative or net positive that we could garner from that?
Yeah, look, I think infrastructure investment in Australia is a super important part of the inflation story. And it's not just today or this week or this month that we're seeing that conversation flow through. In fact, de-scoping, deferring and cancelling of major public sector projects has been a theme throughout this entire year. We saw in the Victorian government in Australia around Melbourne, the cancellation of Commonwealth Games investment of around $7 to $10 billion. In New South Wales, where Sydney is, we saw around $7 billion worth of road infrastructure cancelled, and we do expect to see more of this, particularly in the transport infrastructure. Unfortunately, what happened in Australia, which seems to be what happened in a lot of advanced economies, is we went into recession. We thought, hey, what's an easy way to get out of this? Let's build some stuff. And it's really hard to turn that tap off when you're halfway through projects. But when you haven't started them yet, it's a lot easier. But we've seen other evidence of the fiscal policy take the reins on inflation as well, albeit much more modest than monetary policy, in doing things like deferring subsidies for childcare, deferring certain tax cuts, making sure that the timing on giving people cash and the timing of high inflation are as different as possible, as well as slowing down certain infrastructure projects.